Okay, guys. So welcome back. So in our last video, I did analysis on CAD, the Canadian dollar and the Swedish francs, and I told you how that I saw that the market was going to buy into this level, and I placed that trade holding on to that level, knowing that it was going to buy into this level. Okay, and the market did the rejection. So I'm going to be looking at another real-time asset that I want to analyze. So most of what we see here are OTC. Uh, okay, though the profit is not much, but let's just analyze it. Okay, you could see that move the market is doing. Like I said, this is what we want to see it do. Okay, currently you can see that trade running. That's because you could watch our previous video. I'm going to tag it to this video so you could go watch it and see when we did the analysis and where we validated and placed that trade. Now, it was not just fear of missing out. We understand that this is our optimal level to buy from, but then we bought from this level. We placed that buy for 2 hours. All we need is that the market should just be above our entry level for at least 2 hours. That's all. That's why I love this. You could do that for 1 hour. You could do that for 15 minutes. All you need to do is be able to analyze the market, be able to see it. But I don't like trading the 1 minute time frame. Now, a couple of other traders love trading the 1 hour, the 1 minute time frame, 1 minute expiration. But then I'm not that trader who would trade a 1 minute in expiration. Okay. Basically, I love trading the larger time frame from the 30 minutes. I hold my trade from 30 minutes to 4 hours. Okay. Now that's because I understand the flow of order and I like the flow of order supporting my moves. So I like waiting for the right opportunity to get those massive moves and then get to catch them and know that if I can get those sniper entry at a very high level, probably around this level, if I'd entered here and held it for 3 hours, I'll be in profit. Now, because the market came rally for a while below this, as long as this was my entry, and so the rule of the game is try not to be caught in between. So in this video, what I'm going to be teaching you specifically is how not to jump in on trades, okay? How to measure your trades and know if it's a good trade or not. Even if you're right, your analysis are right, are you too early or are you late already? Okay, so these are questions you need to ask yourself. As the flow started, now I understand that, okay, you want to make profits, okay? Now, the thing is, you're considering the time, okay? Because the move in the market is going to match the current move. So, what's the economics of today? Today is Friday, and food off, and then non-farm payroll will be released. News about that will be released in about 1 or 2 hours from now. So we're going to see the market make those massive moves. Okay, NFP is going to be released. So NFP, we're going to see massive move. Okay, from our structures. So are you too early? You need to look at these in things. These are if you're trading real-time assets based. Now, if you're trading OTC, you have nothing to do with this information. You have no fear. Okay. Now I love trading these pairs. Okay. I love trading live assets because I on Fridays I tend to close my trade for the week. Okay. I'm done for the week. Okay. And these are trades I can share, do a live broadcast on my trades, and people could get to follow it up and trade it too. So that's why I like trading real-time assets, not OTC. There's nothing wrong with trading OTC, but I feel like it's a systematic thing. It's a simulated asset. So the algorithm is studying where the trend is. It's studying a couple of other things, where the orders are and all of that. So I don't like playing simulated assets, though I do derivative trading, but then simulated assets are assets I try not to gamble with, especially when I'm doing options. Okay, because for you to be right in option trading, when you're trading binary option, the flow needs to back you. It's not by the number of pips. Do you understand now? The difference between option trading and forex trading is that in option, whether it does 100,000 pips or whether it just does one pip movement from your entry level, you will be in profit if your expiration, if the market remain at that predicted area within your expiration time. Okay, so it's not like forex where if this market had moved from year to year now, I will make some dollars and all of that and come out of the market where I'm risking. Now remember, you're risking 100% of your money for only, I think, 90% of your money. So this calls for sniper entry. You need to be good at sniping. You need to be good at sniping. Now, I'm not saying being a scalper, okay? I'm saying be a sniper. Know the perfect turning point, okay? So knowing this perfect turning point in the market is going to help you, and also knowing whether you're early or not, okay, is also going to be whether you're late for that trade, okay? Now, the best time for me to have entered this trade was if I'd done my analysis at about early in the morning for this asset, and I saw this asset and did the analysis, and I saw this move and I prepared for it around here. Now, immediately it did it low and started reversing, I would have placed my sell and walk away. Within 2 hours, just here, you could see, or when it broke out from this structure. Now, one of the confirmation I had for placing this trade is that I saw that the market broke out from that range that was inside here. So probably for the next 2 hours, it's going to be trading in this direction. And I've seen the market now, like I said, you need to check where are you entering and where you're exiting. Where is the next zone where the market is attracting? What is attracting the market? This is the structure attracting the market. There's a fair value gap here. It was tested. Albeit the market is trading for this. This was liquidity lying up here. The market did not test it. The market did not read it. So the market is coming for the structure. This is the next level where the market is interested in. Now, it broke out from that range. So a retracement to that range is a confirmation. Look at this. This rejection was like a retracement. Let me use a smaller time frame to explain what I mean. You could see that this is a 5 minutes, but this broke the structure. All I wanted was, okay, once the market breaks the structure, I would be inside the trade, okay, because this was my zone. Once it comes out my zone, it means that it has respected, as long as it did not take out the last low. Look at this. This was the last low. It tested, retraced back. This was the retracement I would need if I needed to enter this trade. And currently, if I'd been here a little earlier, around 12 o'clock, I would be in profit already. That's a sniper entry. Okay. Now midway, I'm still midway, but the only reason I can hold on to this trade and allow it to run is that this is where you could see this. This is where it started. Okay. It's not like it's gonna pick up here, then retrace back. No, I still have a longer time for it to get here, and it's not now. In about 30 minutes, it should be up here. Now, before the news comes in, the news impact and all of that. But then the market is solidly going to be above my entry level, okay? Because I've entered at a more better level. So you must learn to do your analysis better. Okay, so in this video, my intention was just to teach you how to find that. I was supposed to do analysis on another asset, but then I'm going to do that for another video. All I have to teach in this video is how to calculate, how to know if you're too early or if you're too late for a trade. Okay, and no, even if you have your setups were right, if you're late for that trade, you shouldn't trade. Okay, so this is a chess. Okay, chess guys.